Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for December 30th, 2018. And before I even get started, I just wanted to say Happy New Year to everybody. I know this has been it's been a long couple of weeks with the holidays, and we are going to be celebrating the new year here in just a couple of days. And I just want to be one of the first people to say Happy New Year to you guys and gals. All right, before we get started, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. There's no better way to kick off the new trading year than trying out ForexAnalytix. We have so many awesome features with our product, and you also have a mobile app that you can download once you try us out. And it's $1 for 10 days. Make sure you download the app as well so you have all of our analysis, our chat room, our private chat room in the palm of your hand. So or on your tablet or on your PC. So make sure you do that after you watch this video. All right, now what we're going to do today is we're going to cover I really want to cover a few things, but I guess first and foremost we have to talk about the consolidation of the euro dollar and understanding that we are in a very tight consolidation. It's a wedge, and you could also view it as a bullish wedge where we have consistent highs, higher lows, and the risk is a breakout higher. Now, as far as this week goes, we have a shortened trading week. Obviously, New Year's Day is going to be Tuesday, so New Year's Eve is Monday night. The markets should open. You should be getting some liquidity Sunday at the open, and then after that, it's going to most broker dealing stations are going to shut down for a couple of days and then reopen New Year's night. And then we're going to get some economic data throughout the course of the week. Now, keep in mind that this week on Friday is going to be the Canadian and U.S. jobs report. And I'm hoping, let's just say I hope, this is what's going to break us out of this very tight range that we've been in, especially with the euro dollar. It's hard to be a euro bull. Okay, it really is when you're talking about the euro dollar. And let me take you over to I'm going to come back to this S&P chart. When you're talking about the euro dollar, with everything happening in Europe and with the slowdown in economic data that we're seeing in Europe, it's hard to be a euro bull. So I think if the euro is going to break higher, it's not going to be a result of the euro. It's going to be a result of the US dollar breaking lower. And we're already seeing the US dollar break lower in yields. Let's go to the 10-year yield really quick. I'm going to take you over to, here's the 10-year chart so you can actually see the 10-year, and I can get rid of this fib. The bond market is rallying, which means yields are dropping. So if yields are dropping, that means the US dollar is under pressure. And when we've seen that in the US dollar Japanese yen, let me go over to the US dollar Japanese yen. Here we are. And you can see the US dollar Japanese yen closed on its lows of the week. We're below the 200-day moving average. We came out of a triangle formation. It took out our trend line from the summer. So the dollar has been coming under pressure against the US or against the yen, but we look at the euro, and one of the reasons why the euro dollar hasn't really rallied is because the sell-off has also hit the euro yen, which is a result of risk appetite, where we have stocks have been under pressure, which I'll talk about here in a moment. But as far as the euro dollar goes, we've obviously been confined since the fall. I mean, you take October, really, we've been trading between this 115 and 113 range. And even though we're testing this downtrend line, you can see it right here. You can arguably say that we're right there. You can argue with me and say, well, it's here, not there. It's really close. We have to break above 115, and then after a break above 115 or a solid break above 115, a move back up towards the 200-day moving average at 116.70 is not out of the question. I think that's pretty doable. But again, I think it's going to have to be a result of the US dollar, not so much the euro. So if you're talking about this week, well, we have probably the most important data of the month coming out on Friday. That's going to be the jobs report. And if the jobs report, which we are looking at 180,000 jobs to be created, somewhere in that neighborhood, if we maybe print 180 or 100,000 jobs and unemployment ticks up to 3.8%, where the market's looking for 3.7%, maybe that is the catalyst that can drive us out of this range. Look, I'm not a dollar bull and I'm not a dollar bear at this point. I think the dollar, and let's go over to the dollar index really quick. The dollar has run its course to the upside. We've closed in on the 618. You see the divergent relative strength. You can see how we have diverged here. And so to be bullish the dollar right now, technically we are making higher highs. You can see we're making higher highs. We got higher lows. But the risk is that with this divergent relative strength that we could actually start breaking down in the dollar index and back to the 200-day moving average, like the euro going back up to 116.50 or 117. The flip side of that argument is if you are a dollar bull, we've consolidated and we are still making that higher high and higher low. You can see higher high, higher lows, from here to here. Relative strength is also moderated, or it's reset. So that could allow for another move back up in relative strength if the dollar decides to rally. So I'm not necessarily a dollar bear and I'm not a dollar bull. I just want some volatility. And that's the one big issue that I've had really for the last couple of months. We've seen all this volatility in equities, but it has not translated to the FX market, which for me, and I know for a lot of our traders, it has been very frustrating because we just haven't seen the type of volatility that we typically will get in the fall. So I'm looking forward to a more volatile 2019. At least that's what I'm hoping for going into this new year. But once again, we do have jobs report out of the U.S. and jobs report out of Canada. This Friday. Now, I guess we should talk a little bit about the U.S. dollar Canadian really quick. I'll just mention it. We're at channel highs. We're closing in on the 618 retracement on a weekly basis. You can see right here. Let me get rid of this fib. Okay, which we're also closing in on 161% extension. But let's just get rid of that for a second. You can see the 618 retracement is just above at 136.18. Also, the daily sentiment index is very bearish for the Canadian at extremes, so that means that the Canadian could reverse at any time just on a sentiment reading. Relative strength is overbought as well. So the reason why I'm bringing this up is because if we have a strong Canadian jobs report where Canada's last jobs report was 94,000 jobs. That was really beyond expectations. And the Canadian, actually, I believe it was right here. Yeah, right here. You can see how we spiked down. The Canadian strengthened, then it reversed right after. I mean, literally, I think it was the Monday after we reversed higher. And that was mostly due to a weak crude oil environment. If crude oil starts to find some sort of bottom down here around this big 618 retracement, okay, and excuse me, my allergies are bothering me just a little bit. So if crude oil can at least bottom, if the Canadian jobs report is a strong jobs report and the US jobs report is a weak one, then the US dollar Canadian might come back down towards channel lows, which would be 134. That's another opportunity that I see for Friday. But guys and gals, I'll tell you, we've been in really tight ranges as far as the euro goes, and I'm really looking forward to some sort of breakout here. And I'm hoping that that this breakout will occur on Friday. It's as we come into a new year, it's important to be hopeful, right? So last but not least, let's talk about the S&P. So the S&P really had bounced back. We had a strong bout of rebalancing going into year end, and remember, year end's not over yet. We still have you know, you might have some actual buying coming in at the first of the year as well, but I do believe that the S&P will struggle as we get above 2520 and back up towards 2600, somewhere up here. You're going to see a lot of this. Is, I would call this a resistance zone. We've had a sharp V-shaped recovery, not a capitulation type of move in my opinion, but we have recovered to a longer term trend line, and I'll show you on a weekly chart. We've recovered to a longer term trend line in the S&P. We're bouncing, but I think that that any significant rally from current levels, especially about another 50 to 80 points in the S&P, is going to find some sort of selling. And if you guys are looking for a short opportunity in the S&P, I think that or maybe even looking towards a sell-off and risk, you've got to wait for the S&P to continue to recover here. We could fail though at this 2520. Remember, these are the spike lows basically from the spike lows from back in February of 2018. We're already struggling as we're there. So if we get above 2520, maybe we might get back to 2600. And that is important if you're talking about currencies, because if risk continues to bounce, meaning that if the S&P, broad stock market, and other equity indices, if you're talking about the DAX or maybe the Nikkei, if those continue to recover, that is going to be another headwind for the dollar. The dollar typically will struggle in periods of when the equity markets bounce. So that's another thing that I will be paying attention to going into next week. But guys and gals, I want to wish you a happy new year, and I want to also welcome you all to try the ForexAnalytix platform, joining the ForexAnalytix family. Like I said, there's no better way to start your year off than just signing up with us and trying us out and being part of our community. And if you like this video and you think it's going to be helpful going into next week, into the new year, make sure you hit a thumbs up on the YouTube channel. If you're watching it via YouTube, make sure you subscribe to our channel so you don't miss any of our free videos throughout the course of the week. And it makes us feel really good when you like this video. So thanks a lot, everybody. Happy New Year. I hope you have a safe and wonderful and prosperous 2019. I'll see you back again next weekend on the week ahead video. My name is Blake Morrow with ForexAnalytix. Have a wonderful day.